Hello, hello, hello. Happy CPI Thursday. Or for inflation going down, not so happy CPI Thursday. Good morning, Patrick. Good morning, McRangers. Good morning, Jacob. Good morning, Sterling. Did you not inform work that it was a CPI Thursday, Sterling? Thanks again for whenever you can put in the news. Uh, I logged on and expect to see the big scrolling news come by, and there was no news in there. I was like, oh no, how am I going to know what happened? I guess Sterling's busy at work. We always appreciate Sterling, though. Everybody thanks Sterling for everything he does. All right, smaller audience today. Wow, CPI Thursday. Everybody took the morning off. Maybe maybe everybody thinks there's nothing can make this market go down, so just we don't need to know. All right, let's take a look. We also had a couple earnings out this morning. Um, Delta Airlines and boy, I just blanked out. Oh, Domino's Pizza. So, but until that, we had core inflation coming out hotter than expected, 0.3 month over month, 3.3 year over year. A lot of people expect this to go down this month. This was expected to be one of the last dovish prints, but it's already up a little. Inflation rate month over month, 0.2 on the headline number, 2.4 year over year. The super core, which is not on here, was zero point 0.4 month over month and 4.4 year over year. So again, I know they're saying it's going to go get. I mean, we had daily Fed Daily last night speaking that they were worried that price. They were worried that inflation could dip below 2%. We're not even there yet, and you're worried about. And they're not worried about prices. They don't want deflation at all. She said last night. You know what? We don't want prices to go down. We just don't want them to increase faster than 2% for people. You're going to bury people in this. You're going to really bury people. So that's where we sit right there. Good morning, Anissa. Good morning, Royal Palms. Hello, Charles. What else do we have? We had jobless claims. Now, this number bumped up. It was already baked a little into consensus due to Hurricane Helene with North Carolina, Georgia, Florida. But you also have Stellantis layoffs or furloughs in Michigan. This came in pretty hot, though. Pretty hot, even with that. We'll have to see what happens. But some of that's due to hurricane jobless claims. But continuing jobless claims also bumping up substantially. So, based off this one report, this is very stagflationary. But one report does not make a trend. Although they seem to pick and choose data, they say one thing is we're not going to make a decision on one thing, then they make a decision on one thing. So I think they just pick and choose their data points for what they want to do, anyways, and then try to form a consensus around it. That's what I think they do. So we don't need this clown show anymore. All right, we still have Cook speaking. Yay. The 4 and 8 week bill auction, the mortgage rates coming out, and then the Fed balance sheet after the close. Remember, PPI and Michigan settlement tomorrow. So we're not out of the woods. And bank earnings kick off tomorrow. Let's just take a look at that real quick. Today we had Delta, which was a miss. Domino's Pizza was a beat on EPS, but a miss on revenue. So we had two revenue misses this morning. And Delta also has a really nice potential double top for people following along at home. Tomorrow, JP Morgan, Wells Fargo, BlackRock. All right, back to the markets. Let's see where we stand right now. Quick little refresh. We have a lot red Amazon, Tesla greens of the mega caps. You got Lilly green, oil after its pullback, after completing the double. You have oil little bouncing there. Let's just refresh the groups again. Energy leading, followed by consumer cyclical, followed by utilities with technology, the big lagger, and comm services. Let's refresh this one too since stuff's been moving. Since it's been moving, where do we sit? We sit with a 25 cut. 25 and 25. So still pricing in 50 basis points of cuts this year, 25 in each meeting, and then another 25 in January and another 25 in March. So nothing really changed with that. Fear and greed, still upper end of greed. The Schiller PE 37.22 going into earnings season. Are we done yet? All right. Now, the S&P coming up to that next cluster area yesterday. We had 58.43 to 58.48, and the high was 58.46, pulling off a little this morning. If we do break through there, minor is 58.56, and major then is 58.71. And this is sort of wedging back up at this point. Some of you keeping a close eye, but the market's literally shrugging off everything. Don't know what the tipping point's going to be until then. It's still in bull mode. In case you're wondering, still in bull mode. So those are the levels on a pullback. I'm really going to be watching how we open, in 20 minutes, how the cash open reacts to these numbers. Because so far, you had some whipsaw right here. Some whipsaw trying to hold some key support. But there's not a lot that's really keeping the market down at this point. My key level is about this 58, 10 to 12 area. We start breaking below that. Your rotation zone is at 57.96, so roughly 5,800. And then remember the key, it's still the very key level is around this 57.40, 57.45. That's going to be the key line of sand. Not for today only, but if we do roll over, we're getting back to the cycle topping area, but not quite there yet. And on the weekly, we're at cycle topping area. So I'm starting to watch for rollover moves, but we don't have something substantial just yet. And we don't even have a little mini double top or anything, so I'm gotta be watching how this is gonna react back down at that 5,800 level if we get back that far. The Nasdaq qualified for a potential double yesterday after hitting the 87.5. So key support for today, I'm watching here yesterday's low in about 20,225 area. Below that, the line in the sand for a closing basis, let me flip this around real quick. The line in the sand for a closing basis is right around here. It is 20,067 area. And then the trigger for the double is 19,818. That's the only bearish setup right now. And that would take us back to the bottom of the potential channel, this channeling area. Other than that, a breakout to the upside. Keep an eye on Thursday, the 26th high, 20,538. And then we have really up, let me find the next level, 20,625. And then you're looking at about 20,876, the upside. So the only bigger bearish pattern is now in the Nasdaq. The Dow, the key pullback level is this 42,600. If we drop below that, the next major support is 42,250. All right, we don't have any double here. Too extended right there. On a breakout above yesterday's high, right around 42,860 would be a retest of the Friday the 27th high of 43,000. And then above there, you have 43,200 is the next cluster. Russell, trying to break through very, very key support. If it starts losing about 2,188, going to start watching for the bigger pullback in the Russell. Okay, we have some key support coming in with the low from October 3rd and from the 50 EMA. Keep in mind, if we do lose that level, from this last little run up, the major line in the sand is about this 2,153 area. We close below that, it could be a very quick trick to the 87.5, which is the 200 simple, right around 2089. The VIX still pulling back, not much of a decrease after the CPI numbers. I'll get your Amazon Royal Palms. Thank you for reminding me. DAX, we did trigger the double yesterday, so we could easily still see some higher price action. We have not been able to close above the 62.5, and so far today that's been the reaction point. But we still have cycles climbing and a triggered little mini double bottom. That only potentially takes us back to the recent highs from the end of September only. The notes yields starting to put in a bottom after the CPI report and filling the gap back to the end of July with cycles at a bottom and oversold. So now I'm definitely starting to watch for the bounce play over the next few days. Then that would be a short-term bounce play. The yields yesterday closing at the harmonic for a stop reduction. I'm going to be watching for a potential pullback in the yields just in the short term. All right, because we're at cycle tops, very overbought, but reconnecting with the rotation zone, I'm going to be watching the 399 to 4 area. 10-2s, not much to talk about there. Dollar index hitting the next harmonic here. So remember, a key pullback area, a very key pullback area is the 8th low, which is 101.94, 101.95 area. So 102 is roughly your key pullback area if it does pause out here, with cycles trying to roll over and overbought. Crude trying to get a little bounce on, coming back to very key support level. Still, we got cycle pressure down on here still, so I don't have a strong buy anything yet for a buy pattern. I'm going to be watching for another rollover play and retesting the 72 area. That's what I'm watching for. Gold, trying to climb here. Trying to climb. Now this, based off this candle bar, invalidated the double. Okay, if it does bounce and gets back above 26.44, so not a super strong reaction. We're running into now short-term resistance about 26.55. Gold, it looks like it still wants to pull back a little more with weekly cycles rolling over at least to this weekly rotation zone. So the little potential bullish pattern is off the table, but the key level on any bounce is 26.55. Good morning, Richard. What else do we have? We have the yen. The yen taking the little mini double top off the table right now. Potential never triggered. Yen still climbing towards that 150 first target. Euro. Remember, we have the longer trigger double. This is an area, hold on. This is an area just for teaching. Jeez, come on, let me get the right one. This is an area that CO came down to the closest 109 area, which is stop reduction on the double with cycles on the bottom turning up. This would be an area it didn't hit the level exactly, but I definitely, from the way I do things, be raising or lowering a stop because it was a double top. Now the invalidation point is still all the way back at 110 or roughly 111. So it wouldn't be the stop wouldn't be down at this 110 level or anything. It'd be up here further, but I definitely use it as a stop reduction. The spiders, yesterday, we had 577.07 roughly closing there. That was the next harmonic. On a continued rally, 579 is your next level. On a pullback, this is where I'll use the prior harmonic. This 575.89 in conjunction. I just can't grab the right lines today. In conjunction with these harmonics. So my cluster would be about 576.16 to 589 as a key cluster. We're right below that on the open, so any rally I'd watch for that. And then my next pullback level would be about 574.75 to 575. Below that would be 573. The Qs, we have a little potential double top also in that. Remember, if we do rally on the Qs, 491.66, and then roughly the double top area of 493.70, but I looked at yesterday's close, 493.15. Very, very key support right at here, 488. Let me jump to Amazon for Royal Palms. You still have the mini double bottom in place, 187.60. Okay. Now what's interesting here, yesterday closed above the 62.5. So that could have been a potential front run pattern with the first target, at least for stop reduction, being 186.68. We're going to gap above that today. That's exactly a front run pattern for me. So that could be raising a stop because that's an aggressive front run pattern, but it's trying to bottom out. If we close above 187.60, then you got the double to trigger. So that's the way I'm looking at Amazon right now. We got Robo-Taxi today, tonight. This has turned into a triple bottom. So that's off the table. There's no potential bounce move. We're still holding the trend line, but if we start breaking below 238, the key targets are at 231, and then we've broken that trend line. What do I see? A decent pullback level on Palantir. A decent short-term pullback is back at 40 bucks. Right around 40 bucks. And then even the rotation zone, I'd be watching around 38. So this is getting a little vertical, but as long as it doesn't close back below 38, that's what I'd be watching for right there. Also, we talked about FXI. Here's where. So if you're still in it, we had the drop and the little trying to hold this bottom area. This is where I'm start watching for the secondary bounce, especially going into tomorrow. And now the key level trying to hold these bottoms would be it's got to get above 37.47. Otherwise, I'd be watching for another rollover play. So my key line, the same, would be back at this 32 area. Start dropping below that again. I wouldn't want to be holding this. If it bounces and then rolls over, especially if it can't get above between the 50 and 62.5, that would be my key point with a secondary bounce reaction failure. Also, people looking to Saturday in China for potentially more stimulus announcements. So now the stimulus, which remember I said this could be short-lived, is looking like it's wearing off. People already wanting more stimulus. Well, that's pretty short-lived stimulus right there if you already need more. So that's the things I'm watching right now. Let's take a look at NVIDIA because it's been pulling up the market the last 2 days. Finally checking off the 87.5 again yesterday. Finally checking that off. So, but keep in mind, the support, you have a prior resistance becoming pretty significant support zone. So between 128 to about 130 is a very key support zone that I'm keeping an eye on in short term also. All right. I don't think there's. Oh, let's look at DAL. They had again a miss, and they're trying to blame traffic slowdown or travel slowdown not on the economy but on the fact that people aren't traveling due to an election. I don't know about you, but I don't know how an election doesn't it doesn't really affect business travel and personal travel. Are you not traveling because we're headed into an election? I mean, I could understand not making a big purchase, but generally travel is, you know, are you saying, well, I'm not going to go take that trip that I had planned because we have an election coming up? Don't know about that excuse. Think it's just a lame. I think things are slowing down again with the economy. Now, keep an eye on this because if it does eventually trade, not today, of course, but if it does get a close below 46.90, you do have a well-formed double top in place. And the only other thing today in earnings was Domino's Pizza, which missed on revenue. And they've been offering lots of specials again. It's one of the things I track because the lower end pizza and how people are doing with that. So they missed on revenue. But there is no great. Well, I was watching for this potential double. It looks like it's turning into a triple. So I'm not looking for a bounce play anymore just yet. MAGS ETF. Magnificent 7 ETF. Still, 48.53 would be the next key price. You know, you do have, it is a qualified double, especially since the second target still is within the lows from the launch. So overall, it's still an upward trend in the short term. Even on a pullback to 45.70, it's still holding the last little major support zone. You start losing that, that's where I'd start to worry on the MAG 7 from this ETF, the way it's weighted. So if we flip this around, if we started losing this key area, this key support area right around 45 to 47, and we lose the 50 EMA, the key line in the sand would be 42. Yeah, it's really bad when people can't afford discounted Domino's Pizza. So I keep an eye on it. It's the only reason I was bringing it up. There's a lot of things that I might not trade, but I might keep an eye on because it gives me a macro perspective of what's going on in the economy. Because all equals, that's what I was wondering. I've not looked at this so it's all equal weight. So those are the key levels I'll be watching for in that. Yeah, food prices ticked up according to the data this morning. Again, we have this sticky inflation. They haven't knocked inflation out. And they're terrified. I mean, yesterday, Mary Daly, who's more interested in DEI than managing banks, was literally her comments were like she's terrified that we could have a print less than 2% on inflation. They don't want prices to come down. That's what they said. They just don't want them growing as fast. You know what? Prices, you're gonna crush people. And things like tracking the Domino's discounts makes you go down. Or it makes me a lunatic. You know, they're just little things you learn to track like that, and it keeps because the lower and middle end consumer are really they're done. They're done. They can't keep up with 2% inflation. Wages got a bump with what happened with the pandemic, but that's not going to keep happening. And what happens when, you know what, you still got some increases, like you still got another bump in Arizona on the minimum wage next year, but these are starting to hit the ceilings that were passed. And they're gonna, because companies are also, they're going to more kiosk ordering and everything else, which means you don't need as many people, because then the people they do need, they have to pay slightly more. But if we keep growing at this kind of 3% inflation, lots of people, if they do get a raise, it's between 2 and 3%, and that's not necessarily keeping up with inflation. Yeah, I know. That's why they're doing it. Inflation pays off debt. At this point, why bother? You're not going to pay off the debt. You're just forestall. It's again, they're forestalling the bigger debt crisis. I know why they're doing it, but at some point, when people can't afford anything anymore, and auto insurance, again, major component of this inflationary report, super core, which is what, services inflation minus shelter, 4.4% annualized. Remember, they originally talked about, Powell talked about, he was following supercore. Now they've just shrugged that off, because that's nowhere near 2%. They're just going to do what they're going to do and find the data points that they're going to try to justify it until it's all friggin' blows up in their face. Let's just see how we're opening today. So I'll start watching if we really start breaking below this 58.20 with momentum. I'll start watching for the bigger pullback on the tick. On the tick, not a very weak opening. Not a super weak opening. So I'm going to watch on the tick bounce back, where the S&P is going to bounce to. Where the S&P is going to bounce to on the tick pullback, and then potentially watch for the rollover play. As long as you're not eating, I haven't eaten at Donald's Pizza in forever. Have some inflation metrics I will share tomorrow morning due to news. All right, thank you. I'll love to see it, Sterling. With that, I'm going to wrap it up for today. Remember, tomorrow, earnings and PPI. And between the two, earnings are going to be more important. With that, I hope everyone has a wonderful day. Thank you for tuning in. I shall talk to everyone later. Bye for now.